Hey, welcome and good morning. I've got a short video for you here this morning that if you're interested in where the market really is in Walworth County right now, I'd like to show you this video and be able to screen record the data that I'm looking at this morning and all realtors are looking at that honestly the general public is probably unaware of, but it might allow you to make better decisions of what you're going to do with the property that you own or if you're going to purchase. And I wanted to get this out right away. My name's Chris DeVincentis. I own Legendary Real Estate Services based out of Walworth County and work in Western Racine, Western Kenosha County with myself and my business partner. And I managed Keefe Real Estate for the last 11 years, and prior to that, owned Remax Lakes Area Realtors for 18 years. So I'm a committed professional in the marketplace, and one of the things that I know that's, excuse me, super important in the kind of market environment that we're in, which changes relatively quickly, is to be able to keep you informed about what's really going on in the market so that you can make great decisions moving forward. And today's kind of a special day because we had a little bit of a data dump last night, and we got the information out related to our marketplace in Walworth County of single family homes and what August brought us here moving into September. And I think you're going to be very, very surprised, and I think you're going to find it interesting. And I think you're going to find it valuable to help you make a decision that you might have been sitting on for a period of time in our market. So without further ado, I know your time is valuable. Let me get right to it for you. The first thing that's really important to know and understand, one of the most important aspects of real estate is for a real estate agent and buyers and sellers is the absorption rate. The absorption rate is the amount of months of inventory on the market. So what is on, what new comes on, and what gets sold creates a monthly absorption rate. And that's a huge indicator of a balanced or imbalanced buyer or seller market. Parity or balance is 5 to 6 months of inventory, depending on the marketplace. And we have been as low as under 2 months of inventory, in fact, lower than that. Now, I'm going to show you right now where we stand, but more importantly, I want to take a look at the trends. Trends are so significant in this industry because while there can be short peaks, bumps up and bumps down, the overall trend really shows really how the population is perceiving things and moving in relation to, in this case, real estate. So in April, we had 1.7 months of inventory on the market. That slightly rose to 1.98. Then we went up to 2.12. Now we're seeing this trend, obviously, but you want confirmation. And I was really looking after July, where it jumped to 2.31 months of inventory. I was really looking forward to August number to see it confirm the uptrend. And August didn't disappoint. We now have a little over 3 months of inventory on the market, and that's going all the way from this low of 1.62. It's doubled. So if the inventory doubles and buyer demand stays the same, you can expect more days on the market and more price reductions. And we're seeing that. Now, the next thing I want to show you is the inventory. And we have 3 categories. We have the active listings in red, the new listings in gold, brown, whatever it might be, and sold listings in black. All right. And what you're seeing at a time that inventory is rising, at a time, yes, inventory is rising, the absorption rate is increasing. What you're seeing is that active listings are increasing dramatically, and you're seeing new listings coming on the market are actually declining, which typically means that buyer demand is starting to wane. And finally, you're seeing sold listings, and sold listings are also in decline. So buyer demand is softening. And here's what I'm seeing on the ground with myself and my team. What we're seeing is second homes are still selling very robustly, and they're few and far between, probably why they're selling so well. But year-round homes, the more popular homes in our area for people who call this home as their primary residence, we're seeing a lot more price reductions coming through, and we're also seeing a lot more days on the market. And that's going to be something that I think is going to take a little while to start showing are the days on the market in any meaningful way, because while people think, things were only on the market for 3 to 5 days, honestly, for the last 3 months or so, in fact, in the next graph, as you can see, it jumps up to and it's been around 37 to 40 days. Here it was 34, here it's 37, here it's 44. So there always has been this about month lag of days on the market as an average, right? But some things, and mainly second homes and lake access property, have been selling in days, if not a week. But it's the year-round homes that are extending it out to an average of 40 days. One of the next significant indicators that you can find in a marketplace that's trending like ours is trending is the active median list price. Now, the median is the statistical center, and it's a great number in our area because the averages are skewed by the high-end lake property. You know, when you start averaging in six, seven, eight, $10 million property, it starts bringing the average sold price up. But the median is the statistical middle. So this is a really good number for our marketplace. And as you can see, the median has been in decline and is now leveling off. That's the active median of the active listings coming into the market. But the sold median price is now starting to come down. It peaked at a high of 276,000 and it is now at 270,000. And the new listing median price has jumped up a little bit. Now, that's just kind of influenced by, you know, what's coming on the market at any given time. Is it a wave of second homes? Is it a wave of primary homes? But, you know, you can see from a sold standpoint that the actual sold, whether they negotiate more, which we're going to talk about, or they just put it on the market for less, the sold median price is actually dropped, right? Now, sale to original list price, huge key. Take a look at this. Sale to list price was 101%, a little over, in May of this year. When we get to June, it drops to 100.5%. July, 99.7%, and of course, waiting for it to confirm for August. And again, August did not disappoint. It's now 98.8%. So in that 1 month, it dropped 1 full percentage point. Now, back in the day when I owned Remax, we sold over 1,300 homes and had a lot of data and a lot of statistics. And that was typically a marketplace running up to 2007, 2008, where property sold anywhere from 3 to 5% off of asking price. As you can see, we're headed back down in that direction right now. And the volume we're not going to get into because honestly, volume is a number of aggregate value. And because we have the high-end lakefront property, it tends to skew itself based on what lists and what sells at any given time. And it's an aggregate number. So I don't place a lot of being informed on that particular number. And I suggest that you don't either. But when you take a look completely and combined at these statistical aspects of our real estate economy, the absorption rate, the inventory, the days on the market, the median prices, and the original list to sale price, again, we're seeing more price reductions coming through. This is indicative, of a market that's transitioning. And you might say, well, Chris, it's a market that's softening. Well, it's transitioning because think about what we came out of. We came out of an astronomical, insane COVID bubble that was, for real estate intensive purposes, it was artificially created. I mean, it's an anomaly, right? It's an event. And at some point, the effects of an event wear off and you start normalizing again. I just want to let you know we're starting to normalize. And this is, we're certainly going to have little bumps up and little bumps down as we start moving forward, but normalization has begun. And if you're thinking of selling your property, when you're talking about, the sold median price being the black dot here at 276, then 275, and now 270, running into the fall with a little bit more demand because fall's typically a good market, you're still going to do really, really well. As we get into the winter and the spring of next year, I'm not exactly sure what's going to happen. There are a couple catalysts out there that I think are interesting. Number one is the rent moratorium. It'll be interesting to see what landlords do with their investment property. And the other thing that I think is important is what's going to happen with regards to the mortgage forbearance program. And there's a lot of people that are in mortgage forbearance. I don't know the critical number of people that are 90, 120 days plus in this area. I get national numbers on that. I don't know where to go to aggregate those. But I don't think it's going to have a lot of effect because I think, honestly, these days, the requirements were pretty stringent, especially in our area, to be able to get a loan for the amount of down payment. And obviously, property is appreciated in value. And before anybody ever gets foreclosed on, why wouldn't you sell your house? I mean, that's a no-brainer. take all of that money and go do your next thing. And whether it's buying another house or renting, your choice. And on that topic, very quickly, rents are going up. Rentals are hard to come by. Rents are going to go up. If you are a buyer and you've been thinking about buying, I've got to tell you, when you take a portion of your payment every month and you send that off to your mortgage company, but what you did is that principal amount you put right back in your other pocket, and you talk about the tax benefits and you talk about the low interest rates. If you don't think it's still a good time to buy, you're kidding yourself. I don't see values declining for a number of years. And then some certain demographic trends could take hold and they could change that. But in the meantime, you can either pay a landlord everything, or you can pay yourself part of it, get the tax deductions, get the tax benefits, and have a place that you call home. So this is Chris Stephenson. I hope that was informational for you. If you want to reach out, you want a property valuation, or if you've already done one and you'd like to reconnect so we could have a discussion about what we're seeing and about how you can benefit from it, please feel free to contact me. My number is below, and I'd be happy to have that conversation. Come out meet with you in person, maybe grab a cup of coffee, and see where you want to go from there, okay? So thank you so much. Appreciate your time, appreciate your attention, and have a wonderful day. We'll talk to you soon. Bye-bye.